Market Sniper is in the house talking to you about precious metals. Thank you and welcome for your daily stream that's going out. We haven't done anything on Market Sniper for a while, so we're overdue. We've got a lot to share. We're going to keep it just precious metals and industrial metals and a little bit of an overview inflationary today. But we will also be coming back with equities and indices and some exciting ideas in future streams not too far off. So we've had a bit of a holiday. We've been so busy on the crypto side. So welcome. Okay, so isn't it lovely out there at the moment? Apparently, according to the Fed, yes, yours truly. Let's actually go straight up and have a look at a couple of tweets. We'll come back to that there gold chart, which is our God market in a bit, but we will show you a couple of tweets. First of all, check out Charlie Bolello. Great numbers, someone doing this. I've known this and I've seen it individually on the charts. I don't have the time to go and check and put all the percentages together. He's kindly done it for us. So what does Charlie say? Lumber, and I've shown you charts on this a number of times. Commodities are turning 265%. WTI crude 210%. Gasoline up 182%. You've got Brent 163, heating oil. That's your energy complex. Big recoveries in energy. So these are all energy. And we are calling, remember, we've told you about on this channel, we expect triple digits again for these, Brent and WTI to come. All part of a major inflationary route that is going on, that is being denied as in existence. There is an inversion, fake reality. We're talking about your future locust burger and all the gold and silver sources you should be having with it, which will keep you wealthy and doing great. And Palladium is going to be featuring as the star here. We're going to make an outrageous call for $4,000 to be run on Palladium. Why are there cars in this thumbnail? Because Palladium, particularly on EV vehicles, is used in the catalytic converters. So purchasing Teslas, Porsches, or any of the others that are battery driven is going to have Palladium instead of platinum in the catalytic converters. So the industrial demand is huge. And then, of course, there's the precious metals. It's a rare mineral. It's part of the platinum family. What else has gone on? So in case you thought it was just about energies and a little bit of wood and trees, you know what I mean? Here you have corn, 84%, copper, 83%. We should be showing you the copper chart today. Soybeans, agris, these are all agris, 72%. Silver up 65%. We will go past the silver chart. We'll have a look at first Majestic, our favorite equity, but others exist. Sugar, 59, cotton 54. Platinum has been a big move to catch-up time after lacking industrial demand as the diesels have been switched off in light of the hybrids and the battery EV cars. Natural gas, Palladium, this number's going to change for us big time. And it's in a beautiful setup, and we'll be discussing wheat and coffee. And then, of course, gold. Let's start with gold because +3 doesn't sound too shocking. But, by the way, it's only 1 or 2% out there in CPI. None of this seems to make it into the CPI, says Stockcats. Yes, isn't it funny? None of that seems to count for CPI, certainly not in any meaningful way. So the inflation deniers are hard at work, and they're all central bankers. Isn't that funny? They're all central bankers. By the way, that didn't include, while we're on it, let's just have a look. This gen threw some charts out for us. Wow, let's see if we can make those bigger. Remember, inflation, my big beef with inflation. That went away as fast as it came up. My big beef with inflation, discussing inflation, is the following. That inflation starts in asset prices first. Let's see if we can expand this. I'm not sure this is going to work. It's a real toilet roll of charts. Let's just see. Beef, you can see the chart. Wheat, you can see the chart. Lumber was already mentioned. You can see the chart. Corn, you can see the chart. Copper, we'll be looking at a better chart, but you can see it there. You can get the gist. Assets were included here as well. Standard and Poor Index. Wow, everything's such a bull market. Maybe the thing we're measuring it in ain't doing so well. Fiat currency. NASDAQ 100, look at that. Wow, Dow Jones. Yeah, BTC. You'll know all about that if you're following our crypto, the Crypto Sniper on YouTube. Go and hit subscribe right now. And you can hear all the news on BTC and, of course, Ethereum as well, even more so and more to come in our worldviews. So the inflation deniers are out there and they are saying, guys, don't panic. There's no inflation around. In fact, lack of inflation hurts. They make a case. Lack of inflation hurts the poor. Oh dear, oh dear. No, it doesn't. Inflation does the most damage to the poor. So as I've explained, assets go first. Let's have a little chat. Assets go first before we talk about gold. Then it trickles down into agris, other commodities, potential stores of values like gold and Bitcoin start showing bullishness as they have done over the last 4 or 5 years as QE policy started to kick in. And then it goes into agris and it starts to come through in the gas, the heating and various other energies that you've seen occur. It took a COVID collapse to mask the inflation of all their policies and the U-turn the Fed did in their tightening that didn't last very long. It's a great deception. They know it. Who pays the most at inflation? People that have no assets. They get none of the upside of the inflating in the asset class. They get all the downside on their basic costs going up. Rental, insurance, bread, milk, you name it. You think that corn and wheat's not going to trickle through to food prices? Wait and see. Okay, but they'll keep hiding it. They'll keep doing shrinkflation and all sorts of other tricks. So here we are, we're looking at gold. Let's be frank, it did beautifully, but it's had a lengthy break. We've got our TG Pink channel here, which it's been in kind of for a while. It stuck a nose out up top here at one point, and it is recently just broken again. And I have a suspicion this time's for real. Where did it stop out? Here at our 1680 key level. Why was it a key level? Well, let's go and remind you, it all tied into the big corona collapse. It ran into resistance. It ran into resistance over here, there, and there, and set up a very, very complex pattern structure on a bull market. We call it a broadening structure like that, but lots of resistance. It then smashed through that resistance, created a flag, a bull flag, where it continued to squeeze into a rising wedge that had been running all the way and had a melt up out of that wedge. That was your top. And we gave you the targets on gold against pound and euro, which were in perfect HVF setups, and literally they sold the top for you. So go back and watch those legacy videos if you will. Since then, it's actually been longer than I expected, I have to say. On and on and on, a bit of false hope over here, didn't materialize, etc. But we keep crying wolf, and eventually the wolf does come. And let's drop you into the smaller time frames here, because I've got good news and I have a feeling this time it's going to be of a longer duration. And once it gets going again, it's a bit like an oil tanker. It takes a while to get going, but then you get a proper run. Remember, gold, you could have got in with us. It's 900 pounds. You're about the $1,100 to $1,200 level on a falling wedge HVF entry, and you've run it all the way to 2,000. People in crypto are spoilt by percentages. So what's been going on the shorter time frame? That resistance, that was the COVID. The insiders sold off and you got a little dip, then you got the full dip, then you got the rebuy, and you got a third minor dip. And then the printing started, and then it just kept on going. So what have we had? We bounced on that level, which was resistance, now turned support. You got a pretty convex rolling over, so you were likely to come down. But interestingly, if we drop time frame again and take you in a little bit more detail, you will see that that turned out to be a double bottom. Technically a double bottom. And you got the teeny weeniest of mini inversions as a fractal with that low, and that gave you a target, and you made that target, and that target brought you up to the previous level. Now, if you're understanding pattern behavior, guys, and you're staying with me during this period, What did you end up here? Well, you've got some interesting key levels of significance. That's right, key levels of significance. We teach you all about this in HVF method, and it's not only a beginning topic, it's an intermediate topic, and it's an advanced topic. You never stop using it. You just get more and more insight out of it, and it keeps coming at you as a point of value. There you go. That's that COVID resistance level now turned support. What do you actually have? Well, we identified the 1750 as an interesting level, as well as the 1680. And you have here, in essence, in a highly simplistic sense, what was a W bottom. Yes, kind of rounded convex W part in part. You also had, as I've already described, a fractalized reversal, which was telling you you're going to go back to your neckline, which you did. Key levels of significance just run. You pop your nose through it. You have a little dip down. You wind up, and now you are going. And that is our big channel. That has been the counter trend easing back after a substantial bull market move. So gold is the God market for precious metals. So we start with gold. This is gold's story. And this W bottom has a target of its own, and that will take you up to the 1820s plus as a goal, and it's already been moving very, very well. You broke out of the channel, classic revisit, rounded bottom, and you started moving up, and you're having a rest at a previous key level of significance from HVF setups and targets from before. Makes absolute sense to me. This is key levels of significance. Those are the lines on our chart. That is what gold's doing. We're calling for you in this video a high probability on balance of those probabilities, recognizing that we're talking about the future where we have not yet been, likelihood of gold to run 1821. With the big gold God market of precious metals doing that, it's going to be overall supportive for the whole smorgasbord. But bear in mind, I'm right down to a 2-hourly. This is a short-term trade. This is not calling for the next 3,500 level, which I think will all be part of the mix in future going forward with bigger structures. I'm reading the charts for you on a 2-hour time frame. So it shouldn't be forever to make that final distance. It should be relatively short, medium term, that being attained. And then you might rest again for a little bit, just like you needed to do when you got back here at the 1750. You had a little dip down. It shakes all the non-believers out. But once you broke, you had a rest at the key level that was around the 1770. And more importantly, that capping descent that was coming from our channel level. You rest, you pull back, you broke it, return move. This is classic, basic price behavior, good people. So gold looking bullish. Your first prediction, the 1821 to fall on gold. Great. So that sets a good backdrop of recovery now out of a quite extended counter trend that was easing post the first leg of the recent bull market move. So what about silver? Now, the interesting part about silver, this was a nice messy chart. Look at that. You're going to have to get used to that with us. We really chart. Let's take it up a bigger time frame one more time. Now, the key thing about this, I'll take the eye off there so you don't have too many lines to boggle your brain. The key part about silver's relative performance is that while gold was doing this, and I'll even use the same color and with lines, and has been doing this, coming back to the pre-COVID dip levels, silver, which didn't get to perform as far as fast in the first part of the up leg. Remember, gold's made a new high in dollar terms, in euro terms, and pounds in the recent bull market. Silver has not. It hasn't gone through the $50 mark. However, what it has shown is real relative strength. We said there was a buying wall under here. And we actually suggested that the buying wall had shifted up underneath this. This was our Wall Street Bets event, which hasn't gone away, by the way. Sprott and Co. are saying 1st of May, the 2011 was the big attack on silver that happened. Workers' Day, very low people in the market, everyone at home, barbecuing, etc. not-for-profit sale of multiple sizes scale hitting the market to knock silver for a 6. He has asked and suggested that 100,000 of all of you people should buy 100 ounces of silver on the 1st of May. I don't see any reason to wait till then, but nonetheless, go look for that tweet with Sprott and Co. and we'll see what happens, because that would be the equivalent of 10 million ounces if 100,000 people do it. Are you one of the people asking for real money? Are you sick and tired of this central bank fiat proliferation shell game with these clowns controlling your money and co-opting you into their slavery system, where they are ever arching and getting more dominant and aggressive? I say no. Anyway, let's talk more about that silver and let's drop down. There is a possibility here that we are getting a decent continuation. I will nick the top of the Wall Street bets out of it, because I think that was a bit of a news-driven mega gap phenomenon on a market that is not so liquid and with real demand for physical can actually cause skittish gap ups with big pumps. So there is indeed the possibility that while gold has been flagging in a retreating counter trend after a big bull move, silver had a first leg down and has since been setting up for possible continuation structure to the upside. Very bullish for me in terms of silver, but have we had any real ripper days? Not yet. I think that's to come. By the way, falling wedge, pop out, revisit, working its way up. Can you see that? I can take you into that on a smaller time frame. Let's do it. So silver looking very good, guys. Silver looking very, very good. Recovery is on, in my opinion, and possibility of upside continuation. Let's just show you that on a smaller time frame, and strong today as well, as you can see. So long silver. I'm talking my own book on all these things, by the way. I haven't been able to source palladium, but I would love to have a couple of kilos of palladium too, because I think it's going to do really well. But everything else, I am potential holders. Do your own research. Recognize we may all have our own interests. We want sound money in my worldview, and you don't print these things near as easily as you print fiat in digits in a computer. And in actual fact, it's getting harder to find. Forget all these stories about flying comets that you can harness and jump on top and start digging the ground out. I can't remember. I think it was the Winklevoss twins trying that narrative on. But it's a ridiculous notion. It costs a lot to get something out the ground. It's rare, and it's being utilized as well in many instances. Being utilized. So that was your falling wedge. Let's just show it to you there in the dark colors. We've hit a cluster of legacy points over here. So we made good progress. Let's go for the square. We hit a cluster of legacy points that's of some interest, which is why we slowed down. But apart from this, this is exactly what you would expect out of a falling wedge. First the break, a return move, and then a move up. Now a little rest, and now we are clearing those levels. We've actually got some open territory till here to make further progress. Quite bullish indeed from silver. So you had your super spike, you had your second and your third impulse, and then you're out. Good, very compliant. Silver looking good, ready to move up. By the way, for those of you that do also play in crypto, have some physical money. On that point, in the links below, Bullion Vault for internet silver or gold, which by the way will be allocated and you can reserve specific numbered bars. However, I will say also now is indeed the time to make sure you have at least as much in physical under your own control, and don't leave it in your local vault holding place. That's the first place the government, the confiscating thieves, will come to. So we are trialing with a company on physical delivery. I've started utilizing them, and I want to say so far that the product is looking great. So apart from coins, which I'm sure you see, that's a kilo bar, nicely wrapped. By the way, let's show you that. You've got the old nag on the back, which you can rarely escape from most instances. I mustn't go too close. You won't get to see the bar might not focus. It says Elizabeth. Elizabeth. You can have one with Elizabeth. Would you like that? An old granny called Elizabeth. Well, yeah, it's unfortunate. It says $50. It weighs 1 fine kilo, and it's got a buffalo. I prefer the buffalo if it's down to you. There you go. And that is 999.9 silver. This is in its own little condom as well. So it's looking good. I'm going to continue to utilize them for personal use, and we will potentially look at making these available. Competitive pricing, customer service, and a lot more to come. So watch out for that. If you want to be involved and you would like the physical purchasing link, let us know in the comments below. Of course, coins and other things, but when you want kilos, you need a little bit more size. This makes for great packaging. You can buy 10 of those. You can have a quick 10 kilos hidden under the bed or wherever else you put it in. Remember this. When grid down occurs, when all the shock and awe occurs, if you don't hold it, everything else is under risk and probably lost. 90% of the law is possession. Possession is 90% of the law. It feels like real pure money to me, and it pings when you flick it. So we'll see. We'll keep you updated on progress there. If you would like a link for something like that, let us know. Hit us with a like on the YouTube, by the way, and then leave us with a comment for that, and you can start stacking bars, a kilo at a time. Let us know on that. And that's delivery pretty much worldwide. Okay, so silver looking good. Very nice. Let's keep going because we're here for a couple of other things. Before I segue to our Palladium friend, many of you might go, Palladium, what's it mean to you? It doesn't mean anything. Well, it's like platinum, a lot of similar properties, slightly deemed more relevant and significant for the EV vehicle catalytic converters, which is why platinum had underperformed immensely and palladium had already overperformed. So it's been like the running star, but more importantly, it has been set up. But before I do that, we've seen a lot on the general commodities going up. I wanted to give you a trade that we were discussing and are in our crypto community. I think I might have, after we were all in, a little bit after it broke, shared it as well, and that's on copper. Now, copper's already done exceedingly well. Copper's already done exceedingly well, but let's just show you the bigger time frame on copper. And we'll switch the eye off, and we will just get the chart alone and see how that looks. So you can see from the COVID lows, 1.9, now 4.28. 4.28. So it's a very, very strong year, a very, very strong year indeed. And in actual fact, in China, by the way, it's also used as a precious metal, a poor man's precious metal, if you like. And they will hold it for its value. So it is kind of like poor man's silver, if silver is poor man's gold. More importantly, it's also used in industrial purposes, construction and building. America is doing an infrastructure project. So let's tell you about this whole narrative actually. 2016, we were short copper. We were a bear copper because China was going bust. You might remember that there was the Shanghai Accord. That wasn't its official name. That's what Mr. Reichard's called it when they banged everybody's head and China went from being totally unindebted to hopelessly over-indebted when they were creating heat in the economy after the 2009 bust over here. Copper stormed from there to there, all basically on the China narrative. And everyone was, China's going to be the biggest, China's going to be the biggest. Everyone else was navel-gazing post-subprime. Everyone else had gorged on debt and gone too much. We had our first inverted HVF in a new trend, and we asserted that we are net bear. Many a grind line, a broadening structure, kept going down. We traded that little mini inverted HVF. I'm not going to take you in on every trade in copper, but we traded that one, and then we got down here, and a certain Donald Trumpus Maximus was becoming president of America. And he declared in his new term an infrastructure-based investment. And we were initially expecting possible further downside because we continuation traders keep on keeping on until the game stops. And then we flipped as it was coming up really quick, and we got wind of that news, and we got a very profitable upside trade, and it continued to go up afterwards as well until around about there when it started to broaden and look a little bit soft. Then we got Scamdemic Maximus, and that brought you to below the previous low. Now, isn't it funny? The Democrats are now, with the new Biden 2021, so he got in at the back end of last year, or was it the beginning of this year? I can't even remember when that damn election was, but it wasn't so long ago. And the new narrative is, wait for it, infrastructure. So everything in construction, if you're doing real infrastructure, most people realize if he does 4 or 5 trillion, only 25% will truly go on infrastructure. The rest will be to the Kennedy Association for Democrats to gorge on, other quangos and places where basically politicians steal your tax money, load up a bunch of debt that will get written off anyway, make you pay the interest on it in the name of investing for your country, for you, and taking your tax therefore. But anyway, those political points largely aside, we have an upside HVF structure exactly 4 years to the day with a new president occurring right now. So I will take you back into that. So you have the macro context of this industrial metal and how and why it all comes about. So on a smaller scale, it's not quite the same size. Let's take it to 4 hours. There is your upside continuation pattern, and it's not running necessarily as much because it had already done quite a lot. In other words, it's come up from quite a bit lower. That other HVF was a first in a new trend, and we teach you in our course and programs why those overperform. You want to learn more about that, you've got to click the link below that says book a call. And then you will get a chance to book a call in a date and time that suits you. And you too can learn about this method. It's totally transferable skill, and you can be amongst other people implementing it. Okay, so back to copper. We think it's going to go higher. We'll give you a quick flash of that target. I wouldn't hold necessarily a lot after it. I think it will go a lot higher still. But if you're trading with leverage, you must take off because it'll probably pull back. That target was 4.61s. So 4.61s for copper, and you can pick it up. Do you want to chase in right now? I would say there's risks associated with that. You should have been in when we were in, but it's got a second interim at 4.3. So it might go a little bit higher, make the 4.32, and then drift off. So give it a chance to rest before it runs a little bit more. So that's copper. That's a setup, and that's a bit of history. That's repeating 4 years later. Every politician, your country is going to be better. You're going to have new airports. I've often said most New York airports are absolute shitholes. I'm sorry. For a first world, incredibly powerful country, Kennedy, all of them, what is it, LaGuardia, the Spanish name, they're awful. I've been through all of them, they're awful. Compared to what Singapore does, I can go to South Africa and they're better. Jan Smuts is better. Little KwaZulu-Natal is better. It's a shame. They should do something on infrastructure. They absolutely should. But will they? How much money will happen? I don't know. That doesn't mean every airport's terrible. I'm not knocking the Americans. I like them. But I'm just saying they're crappy. So let's go to Palladium. Whoop, and it was a big day today. We've been talking about it for a while inside our premium community. We like it. We think it's a good trade. I'm going to show you, first of all, just so that everyone can get a bit of a feel of the macro bull that it is. It's probably the most industrially demanded for supply metal of the moment. Down here, palladium you could have had for less than $200, now well over what you pay for gold. That's 2006, guys. I'm not taking you back to 2001 when you could have got gold for $250, $280. 2006, gold was significantly higher in 2006. In 2011, gold hit a high of 1.9. This was 800. $800. It was less than half, and now it's at 2.8. And what am I saying to you? I'm saying potential to run 4,000. We have a target of 3,779, and we're expecting overperformance. It had a huge blow off here and a proper smackdown. When was Scamdemic Maximus? Here it was, 1,500. That was an absolute low that you should have bought everything you could have, given how it was performing, but it could have also been a blow off top. So it would have been, Hind Insights, an amazing thing. So that's your weekly chart on Palladium. Let's drop into it and show you why now. Why now, he say. And don't let your eyes glaze over, oh, I don't understand it. Think of platinum, think of gold, just think of it as a rare, unprintable, difficult to mine. So once again, the usual suspects, Russia, South Africa, are the platinum complex. South Africa is a dominant provider deep into the 80s for global supply. You get small amounts, Australia, Canada, and US, literally making up rats and mice, and Russia's like 10, 11% typically. It might be 9 or 10. It varies on an annual basis. But you're talking about two nations, Russia and South Africa, that provide, barring most percentages, over 90% of the supply here. So it's a very narrow supply chain link. And I wouldn't say there aren't risks involved with this. This is your structure that you're looking at. That's the great advantage. We teach in that there's no such thing as bad price behavior. What might have been hurting you if you were along then becomes snapback, leverage clearing, debt cleaning to set up the next structure like that, which gives you an all systems go at 2.4, and as I've already said, a target that's off the screen. You can trade this, by the way, for those of you that like, why are we talking about this market? It's so rare, no one understands it. People like to trade things that are real to them, and I'm telling you that this is absolutely real. If you're thinking of buying a Tesla or that Porsche EV vehicle that you're seeing in the button, you're going to have it. You're going to have it in your catalytic converter. There's even been thefts happening now of exhaust systems and catalytic converters for the intrinsic value of the metals therein. Can you believe that that is happening? Yes, sir. So in Africa, we've had cars grab the copper out of telephone wires in Zimbabwe and places like that, and then drive off, locking one end of the telephone wire that yanks all the copper right out of all the telephone wires, so it can be melted down and seized. Why wouldn't you have on a much more valuable? Obviously, the volume is a lot less, but it's exceedingly valuable. That is your Palladium. That is the amplitude you've created. This is a long period of recovery. First, a snapback, but then all the COVID, what's happening in the world, dynamics, uncertainty, set up. This baby is going up. That is a very good break, a small rest at its first interim, I can tell you. And we have targets around there. It's a great move. And I expect that you will overperform. In the purpose of getting up to that target to make that, I think you could run the 4K. But if you don't, it won't be too long overall. Now, this is a big setup because that's March last year, this sell-off. And it's broken today. No, today, March month. So it's a 1 year setup. So it could take up to a year or so to occur. I don't think so. I think it'll perform quicker than that. But allow a year for this. It's a simple hodl. Don't over leverage. Have 1 or 2 times. You can CMC, IG, you can trade them. And you can even, out of certain bullion dealers, purchase it. I'm awaiting to hear if our current possible physical contact supplier can indeed bring in the Palladium. And as soon as we're good to go, and we're happy that they're going to look after you the way they're looking after us, their links will be in the YouTube below. In the meantime, you can stack silver, gold, platinum on your Bullion Vault link, which is also below. So 2877 right now. I'm saying to you, this overperforming rare platinum group metal is going to continue to overperform. due to both a combination of industrial demand and inflationary forces that is destroying the value of money and overall bullion holding. You can have a bar of palladium in the same way you have gold and silver. And in fact, its appreciation will, in my view, be higher. And for those of you that are high net worth and don't want to have 2 or 3 tons of these, you can, in fact, have a couple of kilos of palladium. Okay, so a couple of thoughts for you there. Let's have a look at the questions. We didn't look at platinum. Balaji is asking about platinum. People steal copper from streetlight systems in Brazil as well, says Rubens. Silver Highwayman, platinum is 30 times rarer than gold. It's exceedingly rare. It's absolutely correct. Gold is rarer than silver. You get about 8 ounces of silver for 1 of gold. And then in terms of the platinum groups, the likes of rhodium, platinum, palladium, they are exceedingly rare. You know, the amount in weight that you get out, it truly is. People will buy a Picasso because they're rare and he's considered the top. They won't recognize something that is fundamentally very rare, super dense, has utterly unique properties. You can cross borders with it. You could carry quite a high amount of wealth in it. But they'll spend a lot on a car, a lot on depreciating assets. This is truly, truly a valuable one. We should show you. Yeah, so the auto industry collapse is why you don't see platinum at true value, says Lord Humongous. He's in part right. Also, the substitution because of the swing away from diesel. So platinum and diesel, the elective choice of palladium in the manufacturing has also eaten a little bit of platinum's dinner. Let's look at platinum because we still say it's going up. The whole lot's going to go up because what they're being measured against is rubbish and is being proliferated, and we're seeing the perversion of times. What do you guys make of the George Floyd verdict? Interesting political times indeed. This is platinum's recovery. So we've shown this draw before. I can actually just unveil the eye again so that you can see that. That is a monster falling wedge. It's a monster falling wedge. You got the little dip out the bottom. So it has broken. It broke and it did the natural return move that I was already discussing. Had a strong press away and then just had a little bit of a slowing up. So probably come to quite a key level. 1200 is probably a little bit of a level of interest through there. But I'm expecting further upside. But this has not been the star. But it may have some catch up and could also be interesting, and you can also accumulate. It does have jewelry demand. I'm not sure jewelry is exactly flying off the shelves right now, but of course the industrial use. The older the car, the bigger the more value in the catalytic converter. Up to $1,000 may explain the theft, says Pablo Pina. He's absolutely right because they were less efficient, although often that's it's quite an expensive cleaning process, so you're probably going to need some heavy industrial cleaning involved because it has a lot of pollutants embedded in it as an industrial. There was no other option but to convict him, says Nathan. You can be convicted and receive little to no sentence, says Zero Dragon. Yeah, we'll see what carries on there. Maybe it's not the smartest thing to get political. I just thought it was interesting news that came out. This is rhodium, by the way, just for those that think only crypto can have a chart like that. Rhodium, sub $100 in July of 16 over there. Let's get a pen. $2,400 today. 24x, over 24x. Mid 2016, sub 100. 2021, very, very rare. That you can't buy. It's information. I don't even know a place where you can trade it. It's probably not worth showing you, but it just part and parcel of these rare complex aspects that are going ever more higher up in price. The other key thing to bear in mind, guys, is the dollar, because the other half of this equation is in fact the dollar. So we'll give you a small update on the dollar index. And after breaking out of its falling wedge, it's having a quite severe pullback. So it had a falling wedge loss of value. Some of it was quite capitulative. You may recall we had that squeeze there. That indicated to us it was a downside, down, down, down. It finally broke out of the wedge, but that set up a rising wedge. We were discussing that in our premium community, that we expected it to walk slowly up and have regular pullbacks, even if that is a low, and we aren't saying it is, by the way. The dollar could come down and make new lows, but you got that squeeze there. So for the short and medium term, we were bulls there, but not vicious bulls. We just say you might get a bit of pushback. Bitcoin started to huff and puff a little bit, marginally higher highs. Gold was actually battling a little bit during the spell. You go straight into another rising wedge, and we've now broken that to the downside, and we are selling off. And that's an ugly rejection candle right there. So it attempted to go up, gone back down, past its open and down. So just because you've had the big macro wedge break doesn't mean you can't run the last low. That's not a prediction though. We're waiting and seeing. A scraggy performance in a range, little bit of efforts going up, little bit of efforts going down. Remember, it's being measured against other central banks doing similar skullduggery of proliferation. Not quite to the same extent, because the global currency needs to be even more proliferated. This is the Chiffin's dilemma. If you aren't selling enough, you have to buy more of other nation stuff so that you are sending out dollars generally to the rest of the world, because it's a pricing structure for people to buy oil in, even when you're not involved as America. You know, a Chinaman is buying it from an Iranian. Of course, there's all the moves. So on the crypto, let's talk about some other political news. So we've done the dollar index. What's been happening is we got Peter Thiel of PayPal coming out. Little bit of news for you. Actually, former PayPal, he's not there anymore. He's got other businesses and ventures. Yeah, while I'm a fan of crypto and it's all going so great and it's a good thing, we actually have to worry about China. China's very pro-crypto. China made some very benign statements actually recently about crypto. Overall, we consider it an alternative investment. So to hedge funds, you have what's called alternative investments. That could be Persian rugs, special vintage wines, old cars, you know, classics, etc. They're not exactly highly liquid equity stocks, but that's home offices, some people that are specialists in that area. Art is an alternative investment. So they're viewing it as a category now of legitimate alternative investments, and barring some minor regulation are quite comfortable with it and quite far advanced in their testing of a central bank. So you might think, okay, that means China is supportive kind of cryptos. Remember, they were the risk of shutting it all down at one point, if you recall Bitcoin's history. You might say, why is he talking all crypto and China right now? This is the Market Sniper channel with gold, silver, and palladium. Hold on, because this is about the dollar. This is about the dollar. And Thiel is pointing out to all those that would listen, is he wants the new tech and he wants to be a technology new thing guy like Elon Musk and all of them. But at the same time, he's pointing out that it's anti-American. What he actually means to say is that China supporting new tech is an attack vector on the old school unsound money, which has the dollar as the global world currency. And so by being anti-American, what he means is you're not supporting the Ponzi scheme of the dollar. And to all my American friends, if you're to be anti-American on anything, that's what you should be anti-American on. The sustaining the global hegemony of the dollar is not in your interests, although I fear what they will bring in. It might not be anymore near as benign, and it's going to be certainly big on surveillance, tax extraction and regulation. So I don't I don't have a great hunger, and I don't get a great delight out of seeing America fall on hard times post losing the power of their exorbitant privilege, which is that I don't have that vindictiveness in me, and I don't have that optimism about what replaces it necessarily, but it's going to happen, and it won't be sound money because, as I say so many times on this channel, they will never let you have your own money. So to all the Bitcoin maximalists that think it's totally restricted and limited and they own it and it's private, you're wrong, wrong, and wrong. They would have cancelled and killed Bitcoin if they didn't think they could control it, which means they're probably controlling it and they're probably slowly taking it off the retail guides if they hadn't owned it from the very beginning. But it is an attack on the dollar. China supporting new technology and central bank issuance is an attack on the dollar. Mark Carney did have this, my friend, it's time for you to think to stand down with Jay Powell discussion, as if it was his decision, as if he was the wise man saying it, when he spoke of we have to start thinking of post the dollar hegemony environment. So it's all coming, and they are whispers all along. So in terms of that, that's where we are right now. But will it be dollar milkshake theory? In other words, as the others collapse from the outside in, do we get a final death flurry in the dollar? Because a lot of people that don't know cryptos, don't understand gold, will just chase to the largest, in their mind, safest big currency. Will we get that, or will it go out with a whimper? So you are going to see economic history being made. It's not that far away as part of this. And that is why, gentlemen, that will still exist after dollar no longer the global currency in the world. The next day you wake up, that will still exist. It will still weigh the same. It will still have the same feel. It'll still have all the same unique properties. And the dollar will go in those pubs where they have the Zimbabwean note, the Hungarian florent of the 1800s and 19, the Weimar note. It will become another broken promise of history to join many, many others. And that is why taking it physically and controlling it out of the system will force change. And I want to be an orchestrator of that. And as I say, we will bring that, and you can start accumulating in your bullion vault, link below, and click and accumulate. And then you can sell it off and trade it all into physical later if you choose, or keep some online, keep some. It's practical to have a combination of both. Anyway, let's have a look at some of your questions. Someone likes the blazer. I don't know if I'd call it a blazer. It's a summer jacket, but thank you anyway. Anagram for fun. China equals chain. Yeah, blockchain can be. People do all of these things. There's numbers and all of these things. On this day, so many years ago. I love that stuff, but that doesn't always mean necessarily as much as you might want it to mean. You should look into magnetic pole excursion research. So is that about pole reversals of the globe? Solar micronova cycles. There's some interesting astronomy and astrology coming out. Guys, book a call. We've given you the copper trade. Let's summarize what you've seen today. There's 418 watching. I thank you very much for coming on. Do you remember to like? 134 likes. We appreciate that. We especially value shares, so please do that. We've given you today, in summary, a higher grade copper bull market call with a target. We have also told you gold short-term target through 1821. We have also highlighted that the dollar index is weak and still showing weakness, and it's really just bounced. It could trade lower. It could walk out very slow with regular rallies and drops. It is being measured against something that is structurally equally sick as it, so we don't see anything here as a beauty contest. It's who's the least ugly for now, and we did determine that this is in fact beauty, and it looks good, it feels good, and it weighs good. And you can get the gold variety, the silver variety. You can even in some instances get platinum and possibly palladium varieties, but that is money. When are you going to get some? By the way, I promised you one other thing. I said we'd go past Majestic, so we'll go past the equity. First, Majestic, to tell you how it's going. It should have a correlation. Silver has gone up from testing those $24 levels, and it is starting to perk up. Also had a huge gap. By the way, that took out that little structural target perfectly, and then it came all the way down. I want to remind everybody, this is something you don't know. We are in an upside HVF for First Majestic, and we did make our second interim here. The only reason you're not seeing that second interim, that's the second interim there of 24.56, is because it was an after hours market move that it made it. So where is the big target? Again, we've told you this before, 34.14, and in actual fact, being the first of a new trend, there could be indeed quite a bit of overperformance in that. I am a holder, so I am interested in it going up. So if you think, I'm telling you this because I want you to pump my share, then don't do it. Do your own research. Do your own research. I can certainly say to you, it's a big silver provider. Silver at $50 if it were to get there. And remember, it hasn't made the new high that gold has. If silver starts doing the things we do, if some of these events like Sprott's buying is taking more and more physical, when you talk to the physical suppliers, whilst they will tell you they're getting supply, they don't want to lose you as customers, they will certainly say it's tighter than normal. I'm watching lots of different channels, lots of great guys doing good work. Check out Palisades Radio, by the way, also out on YouTube. You can also check out Global iGold Advisor. Of course, Mike Maloney, who did an amazing thing on the history of money. He deserves credit for that. You will see a lot of talk from insiders, industry insiders saying supply is taking longer to come through. So the big squeeze could indeed be on, and I want to be part of that for sure. And $34 for these guys, I don't think that's a lot. I could see this being $100 stock and even beyond if we have the full potential breakout. I've said before, relatively priced to monetary supply. On this channel, this video exists. We did the shadow stats adjustment of precious metal prices relative to the inflation of shadow stats since 1982, Ronald Reagan, what silver is currently as a chart, and it is absolutely flat, rounding out very, very slowly at a very low bottom. It has got so much to go compared to many, many decades back of history. In relative terms to the amount of currency and proliferation right now, it is actually never been cheaper. You are giving crapper, highly proliferated dollars away today than you were when you were paying $4 way back when $4 bought you a lot more. That is the nature of inflation. And with that, I'm going to thank you. Remember, book a call below if you want to join our community, you want to trade HVFs, like the copper, like the palladium, and some of the others, and some of the equities involved. We've given you a small look at some of the things that we like looking at. It's not for everybody, but you can grab the link. Just book a call below. By the way, there's a mini series for you as well. It's called the free trading course. Click that link if you have no money and you just want to understand about being active in the markets. Okay, enjoy your day. Nice updating you. Palladium through 4,000. Could it happen this year? Give us a reply in the comments. We'd love to hear. Can Palladium do 4,000? I'll be replying to the top 5 comments. Bye for now.